So to begin, I thought we could share some of our key assumptions for the global economy in 2023. Now, as you look over some of these assumptions, what you'll see is that there's not a lot of tailwinds that is boosting the global economy. And in fact, there are a lot of headwinds that are actually hindering growth in the global market. So on the one hand, we have high rates of inflation, where even though inflation is not as high as it was in 2022, we are still going to be experiencing historically high levels of inflation and persistent cost pressure in terms of your production activities, as well as price sensitivity from some of your end customers. And this inflation will, of course, be driven by high energy prices, volatile commodity prices, which are expected to stay at historical levels that we saw in 2022. But along with this, we'll continue to see firms continue to pass down price increases down the supply chain. So there's going to be elevated cost pressure from inputs, some pressure in terms of your suppliers and partners, but at the same time, firms' ability to pass on some of these price increases will be quite limited because consumers are getting squeezed and they are likely going to be pushing back on some of these price increases as well. So with this high inflationary context, we of course also have higher interest rates, with the US Fed setting the global standard at about 5%. And this is going to force central banks all over the world to also raise their interest rates to keep up with the Fed, to keep inflation low, and also to protect their currencies. Finally, the last headwind is in terms of the war in Ukraine, where we expect the war to continue in a stalemate with no sanctions being lifted in Russia anytime soon, and the war likely going to continue into 2024. The one bright spot in all of this is that China has reopened, it has abandoned its zero COVID policies and is now positioning itself more towards growth and recovery. So that's going to be one major force that supports the global economy and definitely leads to some tailwinds in this region. But for the most part, we are looking at a challenging demand environment, a challenging operating environment, and that's going to impact growth in developed Asia as well. So now let's see how these global factors are going to determine the economic trajectory of markets in developed APAC. So of course, we're looking at pretty subdued growth rates in 2023 as a result of all of these headwinds. As you can see over here, we're not expecting major growth in Australia, Japan, or South Korea in 2023. For the most part, we're looking at moderate growth rates of about 1% in all of these markets. Along with this, what you'll see is that a lot of these demand headwinds, a lot of these operational challenges are most acute in the first half of the year. As you can see on this chart, we're looking at some moderate contractions in South Korea and even in Australia early in 2023, when inflation is very high, when consumers are cutting down on some of the spending, and at the same time, demand for global commodities, global manufacturing is quite low. So there's also a contraction in terms of exports and manufacturing activity. So definitely, we're not expecting huge growth in any of these markets in 2023. But the good news over here is that a lot of the challenges and headwinds will be concentrated in the first half of the year, and you should start to see conditions improve later in the second half of the year as inflation rates begin to come down, as the global economy strengthens, and as businesses and consumers become a little bit more optimistic. So the good news here is that a lot of the challenges that we spoke about, they are coming to an end, and a lot of the most acute headwinds that we're seeing in these markets have already seemed to pass, or we're currently seeing them pass in some of these markets. So let's talk about some of these headwinds one by one. First, of course, starting with inflation. Here we see that inflation in all three of these markets has started to ease in recent months. So we saw in South Korea, inflation peaked late in Q2, early Q3 of 2022, and has since steadily been coming down. Similarly, in Australia, inflation peaked at the end of 2022 and has since been steadily coming down early this year. Japan, a little bit different, where inflation only peaked in January of this year and since has come down in February, but a lot of this is due to some of the government support schemes that Tokyo has unveiled. But nevertheless, the trend is very consistent across all markets, where we have seen that inflation has peaked, and over the course of 2023, we'll see a gradual downward trend in terms of inflation rates. But the thing to note over here is that inflation is going to come down very, very gradually. You can see this in the data for South Korea and Australia, where inflation rates are not quite at the peak that they were at, but they're only coming down very gradually. And we're seeing that firms are continuing to push price increases across some of these markets, and there is still that upward cost pressure coming from higher commodity costs and higher input costs. And so moving forward is going to be, firms are going to have to be very strategic about how and where they increase prices, because we do have consistent cost pressure, but at the same time, we do have price sensitivity emerging pretty acutely in these markets as well, where you consider consumers have been dealing with these elevated costs for over a year now. Their budgets are getting squeezed, their purchasing power is getting squeezed, and so firms' ability to pass on some of these price increases will also shrink. And so in that context, it becomes important for firms to be very strategic about how they increase prices and really holistically view their product portfolio, their competitive landscape, as well as demand for some of their products as they make some of these decisions. The good news here is that inflation rates will continue to ease over the course of the year. And as you see, our forecasts for 2023 are substantially lower than what inflation rates are currently. So you can definitely expect inflation to ease over the next several months, but a lot of the cost pressure that we've seen will continue to persist. Of course, when we talk about inflation, we also have to consider how central banks are responding to this inflation with interest rates. And we're seeing that central banks in South Korea and Australia, they have been pretty aggressive with their interest rate hikes over the past year or so to really combat inflation and ensure that these high inflation rates that we're seeing don't become entrenched in the economy and that consumers' price expectations remain anchored close to the 2% level. So we've seen that Australia has been increasing interest rates pretty consistently over the past several months, and we expect interest rates in Australia to max out at about 3.85%. Similarly, in South Korea, we've seen consistent interest rate hikes, but the Korean central bank stopped raising interest rates in January with interest rates at 3.5%. Now, we don't expect any further interest rate hikes from the Korean central bank moving forward. Here, Japan is a little bit of an outlier where the Japanese central bank hasn't raised interest rates, and we don't expect any interest rate hikes from Japan in the short term. But we have seen some moves around the periphery where the Japanese government the Japanese central bank has raised bond yields on 10-year government bonds. And there are some moves that the Japanese central bank could make similar to what it did in December, but we don't expect any short-term interest rate hikes from the Japanese central bank.
Hi, my name is Krista Reganey, and I'm the Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.